on the Fed, does dollar weaken from here? And if it does it mean that actually the Fed needs to hike more because it's kind of, loosening financial conditions?
Well, I don't think the Fed will respond to the dollar at all. You'd need something cataclysmic for that to happen. You must remember that the US is a giant closed economy. It does most of its business with itself, and actually, unlike the UK, which is a medium-sized open economy, or some very small open economies like Switzerland, the currency matters a lot more. So the Fed won't respond to the dollar. But it did in 2014 because the dollar did go up, 20-25%. So I'll call it it's grizzly, but not a bear. In other words, for choice, the dollar will go down a little bit, but it's not a bear market for the dollar, no.
David, the focus of everyone's weekend reading is going to be our higher yields for real. And I love that HSBC economics is so open, so transparent, and so fractious. Are you and Steve Major on speaking terms? I mean, he's got an outlier low rate call. Has he amended that? And if you had to amend your foreign exchange calls because of the new higher yield paradigm?
Well, look, to be honest, those that have bet against Steve are buried in my back garden because they've been sunk. So let's face that. So, yields have picked up, but was he looking, or were we looking for a pickup in yields in first quarter? Yes, we were. We're not fighting the market. And so far, he's 20 basis points out of court. I mean, big deal on a very big call. But is there going to be global inflation and hyperinflation? And no, there's not. You're going to get smashed again. Every January, February, the Fed's going to raise rates, yields are going to go up, and it just never transpires that way. We're not going to get a global inflation spurt.